Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of all the corporate jargon so you don't have to. And today we're diving into Lazarboy's latest filing, a report that's really important for understanding where this iconic furniture maker is headed and how they plan to keep us all comfortable. Well, maybe not all of us, because this report is a bit of a mixed bag. So, Lazarboy, known for its comfy reclining chairs and sofas, has just dropped a report that tells us about some pretty significant moves they're making in the market and how they're doing financially. It's essentially a peek behind the curtain of their business operations and their plans for growth. This particular filing is dated July 2025, and it's all about informing us investors and the public about what's happening at Lazarboy. Specifically, it covers a new asset purchase agreement, meaning they're buying up parts of another business, and also gives us an update on how they expect to perform financially in the near future. Now, the big news here is that Lazarboy is expanding its reach by acquiring a bunch of Lazarboy Furniture Gallery stores. These are the dealerships where people go to buy their famous recliners and sofas. And this deal involves 15 stores and 4 warehouses located in the southeastern part of the United States. This is a pretty big move for them. It's not just a small acquisition, it's a whole network of stores that they're bringing into the Lazarboy family. The seller in this deal is a company called Atlanta Furniture Galleries LLC, along with some of their subsidiaries and the principals Thomas and Amy DeGoey. The agreement is pretty standard with closing conditions, meaning both sides have to meet certain requirements. Before the deal is finalized, this is typical in big business transactions to make sure everything is above board and everyone is on the same page. What's really interesting about this report is the timing and the separate announcement about their financial outlook. Lazarboy has also given us an update on their expected financial results for the first fiscal quarter, which ends on July 26, 2025. This is crucial because it gives us a hint about how the company believes it will perform in the immediate future, especially with this new acquisition on the horizon. Lazarboy stock is traded on the New York Stock Exchange under the ticker symbol LZB. So investors can easily track their performance, but understanding these filings helps us see the deeper story behind the stock price. Let's talk about the financial update specifically. While the report doesn't contain detailed financial tables themselves, it references an attached news release that does contain more financial information. This is where we get to the real juice of the matter. How is the company actually doing? The news release exhibit 99.1 is where the financial meat is, and it's key to understanding the impact of this acquisition and their overall business health. While this specific 8K filing focuses on the disclosure of this agreement and the updated outlook, the separate news release likely details the underlying financial figures that led to these announcements. This report is signed off by Raphael Z. Richmond, the Vice President General Counsel and Chief Compliance Officer of Lazarboy, which is standard practice for these types of filings. It means the company is formally acknowledging and presenting this information to the public and the regulatory bodies. So what's the big picture here? Lazarboy is actively pursuing growth by acquiring a significant number of its branded stores. This suggests a strategy to gain more direct control over its retail operations and potentially improve efficiency and brand consistency across the country. This is a move that could strengthen their market position, but it also comes with the responsibility of managing these new locations and integrating them into their existing business. From a financial perspective, the updated outlook is critical. We'll need to see that accompanying news release for the specifics, but usually such updates signal confidence or caution about upcoming performance. With the acquisition of 15 stores and 4 warehouses, it's reasonable to expect that Lazarboy is investing capital and that this will impact their short-term financial results. Perhaps through increased debt or changes in revenue streams, but the long-term goal is usually increased profitability and market share. Now let's talk about the broader implications. Like any major acquisition, this one carries risks. Are these stores performing well? Are they profitable? Can Lazarboy successfully manage them and integrate them into their corporate structure? The success of this deal will largely depend on these factors and how well Lazarboy can leverage these new assets. Looking at Lazarboy as a company, they're in a competitive market. Furniture sales can be sensitive to economic conditions and consumer spending habits. By consolidating more of its retail footprint, Lazarboy is aiming to create a more robust and adaptable business model. This is a classic strategy to gain more control and potentially achieve economies of scale. My take on this filing is that LAZBOY is making a proactive move to solidify its brand presence and drive growth. It shows ambition and a willingness to invest in its future. However, it's essential to look closely at the financial details in the accompanying news release to understand the true cost and potential return of this acquisition. The strength of this move lies in gaining direct control over prime retail locations. However, a weakness could be the integration challenges and the financial strain of such an expansion. The opportunity is a stronger, more unified brand presence nationwide, and a potential boost in sales and market share. The risk is that the acquisition might not perform as expected, potentially burdening the company with underperforming assets or significant debt. In conclusion, LAZBOY is clearly aiming for expansion and greater control over its retail network. This is an exciting development that could pay off significantly if executed well, but as always, the devil is in the details, particularly the financial ones you find in that news release. Alright, that's our breakdown of LAZBOY's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.